What's different about today versus the activity we saw in 71 when the world had a super important signal that they should all lose confidence in the US dollar, yet that was the year you were born, here we are still in the US hegemony. So now we can say, oh, but this time they sanctioned reserves from Russia, that's a big event. But so was that in 71, right? And so just to bring perspective into this, could we be having this conversation, right? You know, another 50 years down the road and another event and essentially repeating. What's your take on this time versus that time?
It's a very different world, obviously. One of the most obvious differences is our debt levels, to your point. 400 billion in 1970, 71, 34 trillion today. Can the OPEC nations really want a gold-backed a US dollar petrodollar? Why would they want that dollar when we welched on the US dollar having no golden chaperone? What was Kissinger and Nixon doing right away? Trying to strike a petrodollar deal to create synthetic demand for that US dollar, because now we could print as much as we want. People were worried about it. So we had to make that dollar look more attractive to OPEC so that the world would have to buy oil in US dollars. Well, Volcker raised rates by 15%. Real rates were 5 to 8%. They were trying to make that US dollar look viable to the oil producers of the world. Well, now, fast forward 50 plus years, we have $34 trillion in debt. We have way too much stress on our US dollar, regardless of what you think of the DXY's future. Powell cannot be Volcker. He can't raise 15% interest rates to make that dollar sexy because Uncle Sam can't afford those interest rates. We've hit that fiscal dominance that Luke Groman talks about. It's a very different world. 50 years of living beyond our means in debt and thinking we can have deficits without tears is a fantasy. And that is why there's less interest in those US treasuries. That's why there's more pressure on a Fed that really is damned if they do, damned if they don't. They're cornered now. They raise rates, they crush everything except the US dollar. They do nothing. They debase the currency, and we have victory maybe in the S&P, but the inherent purchasing power of our currency gets neutered like a glass of wine with a bucket of water poured in it.
Real quick break here, guys. If you are a mining investor, you are without question familiar with the Golden Triangle region in British Columbia. This is one of the most prolific mining regions in the world due to its vast deposits of gold, silver, and copper. Now, for the last 4 years, Dolly Varden Silver has been busy expanding their high-grade silver deposit in the Triangle, and they are backed by some of the smartest investors in the silver business, including the legendary Eric Sprott, Hecla Mining, US Global Investors, Fidelity, Delbrook Capital, Sprott Resource Corp, and more. If you are curious why the smartest money in the silver business is cozying up to Dolly Varden Silver, then hit the link beneath this video.
Okay, so you mentioned, a couple things here. So first of all, Grant or Andy, feel free to jump in on this one. The topic of fiscal dominance, essentially the point where a country has to print money just to make the interest payments on their debt. I mean, that's at a high level, the concept. And if I'm missing something there, Grant, would you mind filling that in?
Well, look, if you take a look at the S&P 500 and look how many companies cannot fund operations, cannot pay their debt out of their cash flow. They can't pay off their debt. They need lower rates. The US is in a similar boat. They need lower rates. And, as Matthew was saying there, at a point where everybody is refusing to buy treasuries, or that's a little too extreme, is declining to buy as many treasuries at exactly the point when the US needs to issue more, the pressure there is for higher rates, period. That's just how it works. If people aren't going to buy them, we're going to have to offer them a bigger coupon for them. So that's one of the big differences here. And one thing I think is important for everybody in this room, this is something about which everybody that invests in markets today needs to have an opinion, but they need to understand what's going on so they can perhaps alter that opinion in terms of timeline, because I'm pretty sure that everyone in this room that has spent any time thinking about the dollar has a view about which way it's going to go. Either the dollar's not going anywhere anytime soon and all this talk about competing currencies is complete nonsense, or they're in the camp that says the US dollar's finished, it's just a matter of time. And listening to conversations like this, I'm willing to bet that most people in the room have heard the stuff that goes against what they say and are thinking, yeah, but the dollar's not going away anytime soon. And the people that have a similar opinion to the three of us up here talking are going, yeah, this is exactly what I think. It's really, really important to be able to think critically about this and to understand when things shift in either direction, even slightly, because it can have an outsized effect on your portfolio. So betting the farm on the dollar going away, if your time horizon is 100 years, I'm pretty certain that you're going to be right at some point. But none of us really have 100-year time horizons. So please be flexible in how you view this dynamic playing out, because it's going to shape and morph and change. And to give Brent more props, if you haven't understood his milkshake theory, that's as good a way of explaining what's happening. It doesn't give you the timelines because that's impossible, but in terms of understanding all the different dynamics at play and the way that these dominoes are going to topple, that to me is the gold standard.
Appreciate that.
You're welcome, Brent. Wherever you are.
Andy, you had something
real
there.
quick, first, people need to understand how big these numbers are. Everyone in this room could dream of making $1 million in a career, and you would if you worked a normal career. $1 million doesn't sound like a lot. 1 trillion seconds ago was 31,688 years ago. So the numbers are getting far too large, I think, for people really to even comprehend. We have $10 trillion in bonds that come due this year. How the hell do you pay for that? I know, you borrow some more money. And when you talk about what makes the dollar the reserve currency, a lot of it, most of it has to deal with the fact that oil is denominated in dollars. It's created a synthetic demand. So aside from weaponizing the dollar, we also signed an executive order to go green. And by 2030, we'll be 50% green, supposedly. And by 2050, 80% green. So ask yourself, put yourself in the position of these countries. You have a currency that is being inflated away. They've chosen inflation over austerity. You can't raise rates like these guys were saying. If you raise rates high enough, like Volcker did, to 18.5%, the stock market, the bond market, the real estate market, and the banking system, poof, they implode. Just like that. So these people understand, look, these are guys that are going green. They've signed an executive order to do so. They've weaponized the dollar. Their bond market has eviscerated us over the last couple of years. They go around the world coercing people. So you can see, instead of clinging to the world reserve status and the exorbitant privilege it is, it's almost as if we're doing all we can to create a villain. And that villain would be Xi Jinping and Putin and OPEC, who move away all at once at some point. Little by little by little by little, you see all of this being challenged. 20% of oil sales last year were done in currencies other than the dollar. And look at all of the countries striking bilateral deals outside of the dollar. So the numbers are very big. The Fed cannot raise rates high enough. So in a theory where Klaus Schwab says there'll be a great reset, you'll own nothing and you'll be happy, if that really were true, okay, if it were, let's just pretend for a moment it is, well, either the Fed and the Treasury fall on the sword, or instead you incentivize the world to move away from the West. You incentivize them through coercion, through sanctioning, through telling them that we're going green, we don't need you anymore, and really mismanagement in terms of monetary and fiscal policy, and then they find safety in numbers, and then that all-at-once moment happens. Don't know when it is, but when it is, and they say, look, thank you for everything, we appreciate it, but you guys are going green. We appreciate the 50 years worth of protection, but you got the head of the Saudi crown prince who just said China, it was our most important customer for oil sales this year and for the next 50. Well, those words are important. It's been 50 years that we've been the petrodollar. He's signaling that maybe there's a new player coming in town. So when that all-at-once moment happens, and the world no longer has to hold dollars, and the dollars get dumped, creating a hyperinflationary moment. Interest rates spike to the moon to do the dirty work. Stocks, bonds, real estate, the dollar, the banking system, boom. Now, could be a long ways down the road. Maybe it won't happen. But all I can tell you is that you do it that way, now you have a villain. And it was them who did it to us, and then you come in and you reset with your CBDC, and even as Kristalina Georgieva, the head of the IMF, said, if it's not pegged to something, it's another fiat. What is gold? The only other Tier 1 reserve asset as classified by the BIS in 2019. Who bought more gold than any time in history over the last 2 years? Oh yeah, the central banks. So you can see progression, little by little by little by little. Something's going to change. Don't know when it is, but I'm very confident that we're at the foothills of change.